Welcome to Central Bank Central. I'm Kathleen Hayes. Well, today we're going to take a deep dive into China. Why China? Well, for many reasons, a lot of big things are happening there, but also it is the Chinese New Year and it is the year of the horse. In fact, it's the powerful, rare year of the fire horse. It's seen amplifying all kinds of positive things: freedom, energy, independence, forward momentum, themes of growth. So I am happy for many reasons to be back to Central Bank Central. Sam Radwan. Now, he's not a Chinese zodiac expert. However, Sam Radwan is a partner and co-founder of International LLC, a management consultancy advising financial services CEOs in the Greater China region on growth strategies and cross-strait expansion. He's been published in, quoted by all kinds of top financial newspapers, magazines in particular. And Sam, let's just dive in. It's great to have you back. I wore my red shirt for the Chinese New Year.
It's perfect for the new year. Glad to be back. Thank you very much.
Wait, I'd also like to point out to people that you spend, a third or more of your year in China, in Asia, talking to people, advising people. So you are up to the minute. You have been doing this for many, many years. So, it's interesting. I think when a lot of people in this country think of China, they think, wow, AI, they're just charging ahead. A lot of people think they're going to beat the US to the top, whatever that turns out to be, and so many related technology, biotech things. And with again with this propitious year, is this a good year for China? Is it going to be a good year? What would people like you tell people like us?
Uh, I think the point that I would make is what everybody sees from the outside as to what's happening in China is somewhat different from what you see from the inside, right? And specifically starting at the grassroots and starting with the consumer in China. Unfortunately, this is turning out to be a second year where the outlook for the economy is still bearish. And it's weighing down on multiple factors of the economy. Specifically, for example, given this pessimism, savings has doubled since 2021 compared to where it was a decade before, around 2.6%. I also strongly believe that the low birth rate is somewhat tied to this pessimism that they see moving forward. Another key component is youth unemployment that is still resilient in a bearish perspective. And there doesn't seem to be a light at the end of the tunnel, not at least for 2026 or at least the near future. And then last but not least is the real estate stagnation, which is a problem that just doesn't want to go away. And I don't believe it wants to go away very time soon.
So, of all those things you mentioned, where do you want to start? Real estate in China, the tremendous overbuilding, the areas where there's all these empty buildings that no one is ever going to purchase, buildings that people have purchased and they can't sell now. Is that one of the biggest or just one of the biggest things hanging over the Chinese people and the economy?
I think it's core, right? One thing that we have been able to find out when we have delved into the real estate market is there's a very strong correlation between the real estate market performance and, for example, retail sales. So you're going to find retail sales is heading in the same direction as where the real estate market is heading. We talked about savings. There's even a correlation between birth rate and the price of real estate, a 60% correlation, which is somewhat significant, right? So I truly believe that it's at the core of the issue. Not if you just look at the real estate market, yes, it is a core component of China's GDP. But if you now start looking at the broader market and the impact that it's having on the broader market, that's where you see why, this is a stagnant issue that is going to potentially last a decade and maybe even be generational and have a significant impact on consumer spending. So yes, I definitely look at that as a core. And the key component to look at here is how you should view the real estate market in a very different way than you look at the US real estate market. Uh,
So yeah, but go ahead, because I just like to interject maybe that, it's been going on for a while. All the big boom and all the big investment and then overinvestment and all the construction companies, investment companies came down one by one by one, right? And that's been a while. And it seems that they have not been able to make that much progress. How can China ever clean it up?
I don't think they can. I mean, and that's one thing that we need to keep in mind that this thing needs to sort itself out, right? No matter how much the government has its hands on the economy, this is one problem that they cannot solve. They're not going to be able to solve the uh, behavior or the mood of 1.3 billion Chinese, right? That's going to have to take its time. And back to your point about this problem and how you should look at it differently than you do in the US. In the US, I believe around just under 70% of Americans own their home, right? In China, it's at 90% plus. Uh, of the homeowners in the US, the average number of households that they own is around one home. In China, it's 1.5 homes, just to give you an idea of the oversupply of the market. But more importantly, to give you an idea of the fact that the home is not just where you dwell in China. This is the replacement for the social safety net, okay, that the government is not able to provide adequately. And when you see a deterioration in that type of asset that you're holding on to retire with, right, that's when you start seeing behaviors like an uptick in savings, right, and a downtick in retail sales. And then you start looking at the data and trying to understand, well, when are we going to start seeing the bottom? Well, a big problem that you have is the inventory and clearing the inventory in China, right? In the US, I guess it takes on average when there's a inventory of homes that are being sold, it may take half a year, maximum 3 to 4 months. In China, and this has been confirmed by one of the government's think tanks, it is averaging 24 months. So for me to tell you the health of the market in 2026, we're going to have to wait until 2029 in order to get a good understanding of how that market performed. And that big lag is a factor why this particular issue is going to be lasting for a long time.
So then AI, again, if anybody is considered neck and neck with the US on developing AI and all the construction AI centers and all the things you have to do, it's China. And they're, if you when you read how the stock market's moving, how these companies are moving, I think that's frequently a question what the Chinese already have, how aggressively they're pushing, what they've already accomplished. What do you see there?
We are definitely very bullish on China's prospects in the AI space, right? Not only are they going to be a strong competitor for the US, but they may even supersede the US in that particular space. And I think a strong driver in this particular space is number one, the focus of the government and the enormous amount of capital that's being redirected to that space, right? If you look at the China stock market, there's a skewed portion of that capital going into these type of AI companies. So they're definitely flush with capital. And then number two is China is flush with talent, STEM talent, like no other country in the world. So they are definitely going to play a significant role in that area. But if you take a step back and take a look at the digital economy, right, it is roughly 10% of GDP at a core, right? Even if it doubles in the next decade or so, it's still not going to lift the economy as much as, say, consumer spending that is over 50% of GDP, right? So you're going to see more of a bifurcation in the Chinese economy. where new technologies like AI um, and biotech and even EV, right, are going to be a booming component of the market, yet the rest of the market is going to sputter along. But in order for AI and EV and a biotech market to move forward and realize their full capacity, they need to export their capabilities and their talent and their technologies to the rest of the world.
Mm.
So that's why their relationship with the outside world, specifically the US and Europe, is going to be very important for them to realize that potential.
Well, so we know there's going to be a big summit between President Trump and Xi Jinping sometime in April. What is going to be on the table there? Does either side have the upper hand? Because as much as I can imagine Xi Jinping can see the bifurcation in his country and youth unemployment about, out there and a lower birth rate because families don't want to become families, maybe, right? It's just too expensive, all of that. But President Trump, there's a lot of things he wants to get from the Chinese. What do you see? What's on the table there?
Okay, well, if you remember the last time we spoke, it was right before President Trump started the tariff war with China. And my opinion at that time was very bullish. And it was a very, very lonely opinion, right?
Mhm.
But my opinion stays the same at this particular point, which is we believe that this is an opportunity for both economies, right, to put aside all their political differences and look for opportunities for growth. And the reason being is the reason for our optimism is I believe both China and the US recognize that how coupled their economies is. Both are, right? And for them to decouple would be a disaster, right? And that's the reason for our optimism is there's just no room for China and the US to start a trade war together. It's going to be very detrimental to both economies, right? So now they're past that.
Mhm.
Now they've looked at all the numbers. Now they've looked at rare earth and everything else and how that is critical for one side, etc. And now they're going to try to find a way forward. I would not be surprised if you start seeing um, China prepare a package for Trump where he can announce $1 trillion deal with China, a deal of the century. I would not be surprised if you start hearing opportunities for Chinese companies to invest and create jobs in red states in the US, in the areas, for example, like low tech areas, right? Like EV batteries, right? And other type of energy generation type of technologies, right? Uh, so we are very, very positive about what that meeting will entail, assuming that there is no change in direction from what we see.
Hmm. So I'm just that's intriguing. Tantalizing. $1 trillion investment deal. Are you thinking of something like what the Japanese have done on a much smaller scale, somewhat smaller, actually still a pretty big economy. But what kind of thing would that look like? And when we've seen the things that happen, say, with not just special Trump Korean investment deals, but car makers have been in the US for a long time from Korea, but that's something that kind of backfired a couple of years ago. What do you envision? And or you know a lot of people in China, you talk to a lot of people. Are you getting some ideas or some sense of what other people are hearing about or just looking at as a possibility? Give me something a little more specific.
Sure, sure. So the way I heard it is that China needs to think along the lines of a deal that is bigger than Korea and Japan combined, right? That's why the $1 trillion number, a nice round number. And the focus of that investment is going to be around creating jobs in the US. And it is going to focus on low tech type of manufacturing. Does not get into sensitive issues like AI or biotech, et cetera, and will focus on that particular area. So I believe you're going to start seeing some of that.
Hmm.
And then from the Chinese perspective, that is definitely something that they want to consider, given the tremendous oversupply that they have. One thing that they're sitting on right now is the incredible oversupply of EVs that they're generating out of their plants in Shenzhen and the southern part of China, right? And the inability to sell that type of supply in China, therefore they have to look outside.
Wow. Um, in terms of markets, in terms of investment, give us a read on, bond market, stock market. You mentioned the stock market, how that's expected to go, how that would be, say, how stocks would be affected if she can, and Trump, I guess, together can pull, say, your big investment thing off. And of course, you also got a rapidly aging population that starts shifting where people are putting their money. Give me some, go down the list. What do you expect there?
Yes, I believe that China may be entering a decade of potential deflation, right? If not low inflation, something similar to what you saw in Japan. And the 10-year bond is definitely reflecting that. Now, you and I had spoken about the mood of our clients last year. It has not changed. If anything, my clients invest heavily in the bond market, but also have a significant portion of their business in the real estate market. So now they're being met with a double whammy of low interest yields on the bond market, and then their real estate portfolio, the risk in their real estate portfolio continues to expand, right? So from a stock market perspective, I think you're going to see this continued bifurcation of money being put more and more into those new economies, those digital economies. But you can make an argument that are we reaching a point of a bubble? That is difficult to know, but is certainly something that is on the table, especially if there is some disruptions in the market, like, for example, a war with Iran and a disruption in the oil flow through the Strait of Hormuz. That could definitely be a factor there for sure.
I want to ask you about Europe because certainly if you're in Europe, if you're European, you interview someone. I mean, they're China to a certain extent is one of their big concerns. The EVs, they don't want a bunch of cheap EVs or whatever dumped into their market, to put it kind of bluntly, crudely, whatever. But that seems to me what they've been concerned about, and they are unlike maybe not looking for some kind of summit that gets a big deal with Europe the way that President Trump is, but wondering if maybe they have to start putting up some barriers against China.
Yes, and it's going to, and we already see that, right? So the way to look at Europe, you need to divide it into the European Union, right, which is primarily driven by Germany, which has a large vehicle manufacturing. But then you start looking at the UK, which is a pretty open market for China, right? Due to the lack of a significant car manufacturing competitor in the UK, and they're making significant headway in that space. And like you said, they understand that Europe is going to be difficult. So they're investing very, very heavily in dominating the Southeast Asian market as a key market for them to focus on. Vietnam, Thailand, Indonesia, etc., as well as the Middle East and Africa, right? So they are picking their battles right now. But eventually, yes, they're going to have to figure out a way of dealing with these issues, especially as it comes to the European Union.
So, coming back to the summit between President Trump and President Xi Jinping in April, rare earths. What do you think is going to happen there?
It is difficult for me to say on that one, right? Because that's not our area of expertise. But one thing that is certain, right, is the US has no other option, right, but to continue to rely heavily on China, where they have the refining capability for rare earth. like no other country, I believe, right? Again, I'm not a rare earth expert, but from my understanding is raw rare earth per se is plentiful outside of China, right? But it's once again the knowledge and the technology and the know-how that exists in China and is second to none, right? So there is no chance that anybody's going to be shaking the tree on that one, especially from the US side. If anything, it's an opportunity to reconcile more and to ensure the security of flow of that type of critical commodity for the US. And I believe that you're going to find that the Chinese are going to use this as a key trump card, no pun intended.
And
And, and they're definitely going to use that in order to see to it that they improve their trade relationships with the U.S. and open the U.S. market for them a little bit more.
you mentioned a number of things that could be either on the table or sort of dynamics mixed into this summit, right? And ahead of that, President Xi recently seemed to put on a pretty good face on things, right? That he's seems trying to make people feel confident, comfortable. Hard to get over the real estate market, though. So let's come back to that a bit. You know, what's next? We talked about how deep it is, how long it's going to take to fix, and how it is such a heavy, it's a hard thing for a lot of people, right? Their savings, right? Their essential savings have been eaten up and they may never get that value back. So how deep is it and what's going to happen next?
Yes, and going back to consumer confidence, right? What the Chinese consumer is looking for, he is looking for a bottom in the Chinese real estate market. And they cannot see that yet. And they don't know how long it's going to be until they see a bottom. Right. So it was very important for us to start to look at this a little bit closely and try to come up with an estimate of when would you start to see a bottom. And after that bottom, will you see a reverse back upwards or will you see an L type of scenario? To make a long story short, it's going to be more of an L type of recovery. And we can't see a bottom in place before 2030. In other words, this consumer malaise is going to continue at least for the next 2 to 3 years, if not longer. Now, in terms of how much more does it have to fall, our estimate, based on looking at several factors, including price to rent, is we probably have an additional 40% for real estate prices to fall until you start seeing some sort of stability, right? And this is based on looking at least 2 dozen or so variables, right? Including those homes that are being foreclosed on. There is just nothing more but a continuous glut of inventory of homes that are being foreclosed on. The price that they're selling at continues to be discounted year after year. The percentage of those homes that are getting sold continue to be less and less as a percentage of those that have to be recycled every single year. So every single variable that we're looking at is trending negatively. When do we start saying, okay, well, maybe we're going to start seeing a bottom is when some of these indicators at least start to trend positively. And we're seeing none of that, especially from the data that we saw into 2025. So I think the important point to make is when I'm outside of China, especially when I'm in the US, the view is China's ready to take over the world, right? Then you go to China and you speak to the average Chinese, and the level of pessimism is ubiquitous. It's ubiquitous, and they just do not see or they do not have that trickle down effect of all that investment into AI into their day-to-day lives, right? The focus will continue to be on their investment in the real estate market and youth unemployment, which are the two indicators driving their mood. So a little
What
bit
does
of a
it,
different picture than what you're used to
right?
seeing.
And just a quick one. Youth unemployment, what can they do? I mean, this is not just in China. This is basically in many parts of the world. Certainly some of the, populous with a younger population countries, they're going to have all these kids, coming onto the labor market. And what are they going to do? I mean, but in China in particular, what can they do?
Uh, they're trying, but as always, it's one of these very sticky issues that they're dealing with. And I have a hypothesis around this, right? All this investment into AI and biotech, et cetera, right? Uh, Two things, right? It is not having as big of an effect on the broader market, right? So the core of digital economy is growing very heavily, right? Very strongly, right? But then in terms of the trickle down effect on the broader market, we're not seeing it. And then number two is you can make an argument that AI still has to prove itself as the technology that really is the driver of growth in workforce and the need to grow the workforce, et cetera. And I think China is an example of that.
No, I think maybe the US is to a certain extent too. But I guess final question, is it fair for me to as as we wrap this up, to see this summit coming up, which is going to be a very big deal, or potentially, where Trump and Xi, um, that there is kind of a mutual need to reach certain agreements, right? That will be maybe kind of change the tide, come up from what we've seen the last couple of years, right? It's been, very much antagonistic, Liberation Day, all these, Trump's been wanting a get together for a long time now, and Xi Jinping keeps pushing back. Do you think this is a real potential turning point between the two countries, certainly between the two presidents?
That's what we're hoping, and that's what we're assuming, and that all indicators seem to point in that direction, right? But as you know, with the Trump administration, everything can change in a dime, a day or two before. But where things are at right now, we're definitely very optimistic that that is going to be what we see after that meeting.
Well, it's the year of the horse. In fact,
Exactly.
an extra special horse this Chinese New Year. So, Sam Robin, thanks so much for taking the time, and we look forward to seeing you again soon. It's great to get your inside intel and your big picture analysis when you come on Central Bank Central. Thanks again.
Always my pleasure. Thank you very much.
I'm Kathleen Hayes, and this is Central Bank Central.